Well, howdy folks, I'm at the restaurant and it's going to be a little challenging. As I said, my office is being manicured and constructed somewhat. So I'm going to try and record it. There's a lot to cover, but I'm going to try and edit it to bring it down to about 20 or 30 minutes. So please pick out the points and the areas of the markets that you're interested in. And I'll put labels at the bottom so you can have a look whether we're talking about natural gas or gold or Bitcoin or whatever. We're going to cover Bitcoin today for the first time in a while, which is looking pretty interesting. But I'm going to start with natural gas, and as I normally do, let's have a look at the charts on natural gas. So I'm going to start with a 4-hour chart, and what we did was we sold right at the top here, and we got out right at the bottom with this big move down after we reached up through $3 up to the top of this newly drawn channel, which actually pierced the original channel, broke out through the top of it and fell back down again. And we're now back down at the $3 level. It's a crucial key level. It's the breakout level, and we're back there now. Now on the 4-hour chart, we formed two reversal patterns. We got a little spike low there right at $3, and we got another spike low. It's actually a one down, one up candle pattern here, which is also a reversal pattern, and we're at $3. But notice that we're still below the 20 period moving average on this chart. We're well below the 50, and we're now moving back down towards this area. I've taken a very, very small position here, thinking that we could get down to this support line, the 285 level. If you remember, we talked about 285 as being a very crucial, very key level. We broke out through there after having tried to, and we batted up against that level so many times, and then we got up to $3 and surged through $3. So that 285 level was super key and super important. That's where this red line is. It's also where the 200 period moving average is on the 4-hour chart. Below that, we've got the channel bottom and various other supports down at around about the 260 to 250 level. We could even get back down to there. I think, however, that we'll probably try and hold 285, where the 200 period moving average and this previous support is. We'll see it better on the day chart, but I'm allowing for a move all the way back down to the bottom of the channel and the 250. Remember, 250 is a dividing line between the bulls and the bears. Now, the day chart will show you in a better manner how we broke out through the top. Remember, I said this looked very, very similar to the uranium chart, URA, where we broke out through the top of the channel. We'll have a look at that shortly, and fell back in, stopping out a lot of people that got exuberantly long, super excited about going long, and we fell back exactly the same as URA, uranium. This is called euphoria, exuberance, FOMO, call it what you want, but as soon as the channel top breaks, long bull traders' eyes light up and they go long, and that's where we are at the moment on natural gas. So we've just fallen back down in there right now. Sorry, just a slight interruption. They brought my coffee to me. Fantastic coffee, best in town. Now, so we've fallen back down here. Also notice this is the channel midline. Whether it's important or not, it's really debatable, but it is the center of the channel, so it does play a role, and it's also that key breakout level at $3. Just below there is the 285 level. Look at how many times we try to get through there. We've also got that big gap, that weekend rollover gap below us, and that's why I've got this arrow penciled in here. We're either going to do this, or we're probably going to do that. I don't think we're going to get below 250, so any opportunities to buy at 285 and around 250 to 260, maybe even the bottom of this channel. I think overall, as we approach winter, we might be getting a little bit of a bull run on natural gas. It's interesting, I pointed out on Twitter a while back that, in fact, winter doesn't always bring higher prices. So I've got a little chart that I put up on here on Twitter, which you can have a look at somewhere down here. I've put a lot of tweets on here yesterday. You can go and have a look at my Twitter or X channel. It's the same name, ArcisFX. And this is the chart I put up recently. These are annual bars or annual candles going back to 2011. We're 2023 now. And every time we close below $3 at the end of the year, these roll over in December the 31st at midnight. Out of 12 times, I think it is 7 of them, we close below $3. That's where we are at the moment, 318. When I recorded this, we're roughly $3 now, so we're just above that red line. Will we close the end of this year under the $3 level like we've done 7 times out of 12? I don't know. Anyway, my chance of buying natural gas has come now. We bought at $3, just above there, $3.06. And I'm willing to add, it's a small position, I'm willing to add to 285, and I'm willing to add to 250. If we get below 250, and close beneath 250, then I guess we might have to allow for natural gas to go much, much lower, and we could be looking at the $2 level again. Sorry about the traffic noise out here, but that's the nature of sitting outside at Charlie's restaurant. Now, while we're on this chart, a couple of other things I want to look at, 3 things in fact, and I might just retain this video, keep it for commodities, and make another one on other things. We'll see how we go. And if I do get a little distracted, please forgive me. Now, I put this chart up a few days ago, and it said I'm looking to sell WTI Brent crude oil despite the Israel thing, despite the Palestine, Iran, Syria, absolute calamity going on there. Terrible, terrible stuff from both sides. We're not going to talk about politics here, but really, really horrible, very depressing, incredibly sad, and really the price of oil should be going up. But when you look at the charts, we look at this breakdown through the channel, the bounce back up to the underside of the channel, the 20-period moving average on the day chart, and potential for oil to move down as demand drops off into a weakening economy. I think it was just too tempting, so we sold oil, WTI, at the top here, and we're looking for a move down to about $78 a barrel, somewhere around there. And that would take us to the 200-day moving average and take us down to this key support level denoted by this yellow barrier, and it's also a Fibonacci number. If I scoot back far enough, it's the 23.6% Fibonacci. Not a lot of people look at that, but that's what it is, and it's a Fibonacci number, like all the other Fibonacci numbers, adheres to the same sorts of rules and ratios and things that are found in Fibonacci in nature. So it's the 236 Fib number, and it's also the 200-period moving average, and it's also the recent swing low, and it's also the bottom of this gap over here, more or less. So that's where we are. We're quite nicely in the money right now. We're now down at $85.60. We sold at $87.70. We got a little bit, just fractionally above $88. So that's WTI, and I think we could get down to $78, somewhere around that level there, which I just pointed out. Now, let's have a look at 2 other things on here. Sugar. Now, when oil moves down, believe it or not, sugar prices move down. The use of ethanol in sugar, in energy, quite a lot for motor vehicles, but other things too. When oil prices are up, a lot of things get converted to ethanol use, including cars, and so when there's a oil price goes up, it's expensive to buy oil, it becomes a demand, the demand for ethanol increases, and therefore for sugar increases, and therefore the price of sugar goes up. So they kind of run hand in hand, and if you overlay the sugar chart and the WTI charts or the Brent crude charts, there are often very good and strong correlations. Sugar is beginning to move down. I'm allowing, when we're short on sugar, I'm allowing for a move up to the top of this channel on sugar, but with a bit of luck, we won't have to get up there. We're at very, very, very high levels at the moment. We might have formed a double top here. We're beginning to move down today. Target for sugar, initially the bottom of this channel at around 25.50, and then after that, the 200-period moving average and this Fibonacci level, that's at 24. This is cents per pound, and then 23 cents per pound, and then 22 cents per pound to exit at that major swing low and swing high. That's a very crucial and key level. That green line at 22 cents per pound on sugar is where I'm aiming. Whether we'll get there or not is another story completely. Now, Bitcoin. Let's have a look at Bitcoin. I think that Bitcoin, I like this move. I like the shape of this chart. I like everything about it. What I don't like, almost everything about it, what I don't like is this big spike high up to about 30,000 and falling back there so dramatically. But I do like that big bull rush up and the fact that we broke above this key resistance level. It's a super important level right here. We might be trying to form a head and shoulders here, and there will be pressure in Bitcoin as soon as the stock markets begin to collapse completely, which may or may not be now, and I don't know the answer to that. We'll have to wait and see. We'll look at stocks shortly, but I think Bitcoin has a chance, at least, if the stock markets begin to rally, if the dollar comes off. A lot of it's got to do with the 10-year bond yield and the US dollar, which we'll have a look at as well in this video, and we'll cover all of that and try and put all of this together. It's going to be quite a long video, so if you find some of these parts irritating and annoying or irrelevant, don't just skip past them and find your part along the bottom. There's a the chapters are sort of segmented in there, so you can have a look at the scroll bar, I suppose you call it, along the bottom, and find the parts that you're interested in. But that's Bitcoin. We're now going to be buying, and I'm going to be putting an alert up in the channel. Bitcoin, I'm going to be buying at around about where we are now. If we can get down to, well, we're at 28,000. I'd like to go for 30,000, but I think we could get up to 31,000 and above and move even higher. I think we've got a constructive bottoming pattern here. We've got a peak high, a high there, swing high. We've got a swing low there. Several attempts, swing lows here, trying to break down through that 25,250 odd level and not managing to do so, and now moving up, making higher highs and higher lows. I think there's a little optimism creeping into Bitcoin. A lot of it will depend on things like how the stock markets go, risk on or risk off, how the bond yields look, 10-year bonds. They don't look good, I have to say, and also the US dollar. So that's Bitcoin, and that's all I'm going to say. And then once again, I've got Bitcoin lumped into the commodities chart, and I've also got the 10-year yield on the same charts here. So let's have a look at the US 10-year yield. We're traveling up in this channel, and there's no stopping it right now, I'm afraid. This looks really bullish, and we're now at just under 5%. This is the highest that we've been since 2008, and I'm going to try and put a weekly chart on there, see if I can show you that, depending on these charts from TVC. But I think this is the highest level that we've been at since 2008. There we go. Let's have a look. Okay, so there's 2007, 2008, actually 2007, not 2008. We're right at that level there. That's the highest we've been, and that was at, well, we're not quite there yet, but we're getting close. That was at 5.25%, slightly higher, slightly lower, 5.525, call it. That's where we were in 2008. Well, we know what happened in 2007, 2008. We're right back at those levels right now. We've broken out through that swing high, potential tweezer top, and didn't manage to hold and close.
I watch the currencies dance.
That's my 4-hour rollover, so I'm going to try and wrap this up. We've got a 4-hour rollover coming up right now. So we blasted through there, no problem at all. 3 massive daily candles just moving up steadily. That was a potential tweezer top. Tweezer wick top, wick high at 488. We just push that aside with no problem whatsoever, and we're heading higher. There, that red line is the channel top at 525, and it also coincides, incidentally, with that level that we talked about earlier in 2008, which I showed you just a short while back. So that is a super key level, 5.25%. It's the top of this green channel, it's the top of this red channel, it's the previous high in 2007, prior to the 2008 financial crisis, and that's where we are at the moment. All very worrying for the stock markets and other things all related to the dollar, except for gold. Now, gold has just powered on higher. We've been long on gold from, well, we started buying at 1,912. We added a little bit lower down. We added a little bit lower down. We started off very small and started to increase the position sizes as we went lower and managed to get some decent profit. And we got out at 1945. I think this has gone too far too quickly, and I'm a little bit worried that we're going to get sort of trapped here if we remain long. We've broken through this channel top, so there's my pullback, potential pullback pattern. This level here is super crucial, super key, 1886. Look how we powered through these resistance levels with no problem at all. It is possible that if there's further problems and further trouble in the Middle East, and that it spreads, and that there's just general chaos, all sorts of things can go wrong, that gold could continue just to power up. But I'm allowing for a similar scenario to what we saw on URA and oil, that we've broken up through the channel. Remember those two charts, we had a look at oil earlier, breaking up through that channel, very, very similar, and then collapsing back down through it, back down to where we are now in a short position. Same on URA, which we're going to have a look at straight after this. I'm worried that gold's going to do the same thing. Too many FOMO bulls have piled into this market. By the way, if you're enjoying this video, please give it a thumbs up and consider subscribing to this channel. It really, really helps, and it also helps me to cover the costs of some of the things that I have to pay for, like Bloomberg and Reuters and I don't know, a whole bunch of other news feeds that I have to pay for to get the latest information. You may not like the mainstream media when it comes to financials, but there is some stuff in there which is helpful and useful. Whilst we're talking about that, I want to go back to a couple of things and talking about media, I want to show you quickly, we were talking about natural gas earlier. I want to show you the Commitment of Traders report. This is from barchart.com. This is a free resource. You can pay for it as well and get a little bit more stuff, but generally the free stuff's pretty awesome. So here's the positions that we've got. This is Commitment of Traders positions, net long, net short, and so on. Thank you so much. And you can see our long positions, commercials long, 448. I'm not going to give the numbers. And short positions, 415. Pretty balanced. And we're going to have a look at the chart shortly. Producers, long and short. Slightly short, actually. Long positions, 171. Short positions, 281. And managed money, the traders, leverage traders and others, hedge funds and so on, and also retail traders, 171 long, 145 short. So pretty balanced. Nothing really in that. And then non-commercials, long 201, 252 short. Swap dealers, these are the hedgers, mostly long, which means that the market may actually go short. When you see the swap dealers, in other words, the people that generally take the opposite side of the market, when they're pretty much long, 178 versus 34, you've got to be thinking that they're hedging against a move down. So be very aware of that. That's very, very important. And then other reportables. And I want to show you this chart quickly. The red line is commercials, and the green line is non-commercials and speculators, large and small speculators. Speculators moving up and commercials moving down. So pretty much meeting towards the middle, towards the center. So pretty balanced overall, except what worries me is, as I showed you earlier, if I can find it again, these swap dealers mostly long. Be very, very careful of that. They take generally the opposite side to the market, and they're very strongly long. That's natural gas. Just wanted to get back to that because I'd forgotten about it. And whilst we're on our browser here, this is my Twitter channel and or X, and please go and have a look at that, subscribe, join, whatever, it's free, and I put up stuff there every day, generally around about the US market time, and we talk about yields and gas and uranium and gold and NASDAQ and all that sort of thing. And if you are waiting for a video and you're not too sure what I'm thinking next, if you even care, you can have a look on Twitter and get some idea of what I'm thinking at least. And if you want to get more than that, there's a link below. You can join up my private trading room. There's a link below. There's a 14-day free trial, so you can give that a go as well. All right, so that's gold. I'm waiting for a pullback. I think I'm going to try a little bit at the top of the channel, and then probably a little bit more at around about the 1880 to 1890 sort of level. If we can hold those two swing lows there, that'll be pretty crucial. Look at this big V-shaped recovery from that bottom, and coming off that double bottom there, a sort of a miniature double bottom there, and making a bigger double bottom with that bounce off the channel bottom. So pretty bullish overall on gold, despite bond yields and despite the strong US dollar, which means it's even more bullish than it looks. So that's gold. Now, I think that's all I've got to say on there. Copper we talked about earlier, getting a bit of a bounce on copper. There's been a seemingly miraculous recovery in China. We're seeing some fantastic GDP numbers and growth numbers and production numbers coming out of China, etc. Even though they've banned chips and don't like iPhones, they seem to be doing well. You never know what those numbers really mean, but copper seemed to get a bit of a wiggle on, a bit of a bounce with that good news from China. And then URA, I don't trade copper, by the way. And then URA, well, this is the path again. Remember I said, compare this chart to the gold chart that we just had a look at. Gold potentially going to pull back in like this. And also the gold chart channel's facing down, this one's facing up. And then also the WTI chart, which is very, very, very similar to this. And WTI has done exactly what URA did. I think this is a sort of path that we could follow. We are long from $25 on URA already, but it's a small position. I'm allowing for a break of this channel bottom. We've stopped out quite a lot of the FOMO bulls at the top here. And if you are a FOMO bull, you might have to hodl, as they say. I'm learning some of these terms as a bit of an old dinosaur. Hold on for dear life, because I think we are going to bounce. I think there's a very strong possibility that uranium is going to carry on moving up, and I've got a target for uranium way up at the top here. With my slow charts, you'll be able to get some info on that. Okay, that's not working. Let's just squeeze this down. I'm also using the internet here at the at this cafe, which is apparently not very good. So that's where I think we're going. We'll get through that channel top again, up to around about $32 and beyond. So we're long on that one already, and willing to add some more to that. So that's all of that. Now, stocks. This is really interesting and super crucial. Let's have a look at these stocks. Okay, so this is the stocks overview. I've got the NASDAQ 4-hour chart here. I've got the S&P day chart. Then I've got a few names like AMD, and then I've got Nvidia, which I want to talk about in more detail, and then we've got Apple and Tesla, and I could put Microsoft and Google and a whole host of the other Magnificent Seven on here, but I think we'll just concentrate on these ones, because Tesla had earnings yesterday. Apple, we've got China woes, and chip stocks, we've also got China woes, and also interesting chart formation. So I think I'm happy with what's on this screen for the moment. Let's talk about stocks. First of all, I want to show you the Fear and Greed Index. Now, this hasn't been updated for a while, so I don't know where this is. I'm guessing this has probably moved down, but we're right in the middle of fear. I don't know why this hasn't been updated. It was updated a week ago. Well, one of them was at the previous close a month ago. I don't know when this was updated, but it's been stuck at 35 for a long time. I think this may have moved down. Now, the general rule of thumb is when the market goes into fear, and particularly extreme fear, it's normally time to start thinking about buying. When we get into greed and extreme greed, it's time to start thinking about selling. We're down, I think, probably near the bottom of the fear level, this red zone. I don't think we're in extreme fear just yet, so keep that in mind. But there are all sorts of headwinds for this market. I was just reading some data about banks and the problems that banks have got with bonds and debt, and there's war going on in two different areas of major areas of the world. War is normally good for stocks, by the way. That's a whole different scenario, a whole different argument. People have been saying, well, there's war going on in Israel, there's war going on in Ukraine. It can't be good for stocks. Stock markets have never failed to rally on when there's war. Unfortunately, there's a number of reasons for that. But let's go back and have a look at the charts. So remembering that we're in the fear zone, let's have a look at these charts now. Let me tell you what I've got on here. I've got nothing on any of these except for NASDAQ and Nvidia. And I've been recording these for a long time. You'll know if you've been following me on either YouTube or X or in my private members area. Link below if you're interested in trying a trial for 14 days. So you'll know that I've been trading NASDAQ recently, and Nvidia. I've been short on Nvidia since around about $500. It's been a long wait on Nvidia, and I'm still not 100% convinced about it, but it's looking better all the time. Don't know what the hell that noise is. Wow, I think it's a drill. But let's have a look at NASDAQ. We went long on NASDAQ yesterday, and we got stopped out. We went long on Monday, and we made a really good profit. We took the entire move. Let's go to the day chart on NASDAQ. On Monday, we got in right at the bottom, near this red line, and we got out literally right at the top. That was a fantastic trading day. Nothing on Tuesday. Wednesday, yesterday, we got in long on a bit of a dip down. Actually, we did take that trade on Tuesday, and eventually we got stopped out yesterday on that dip below the red line. Fair enough. We gave back some of our gains that we got from Monday. And now, and very late last night, at the close of play and into post-market trading, we went long again on NASDAQ, looking for this channel to hold and hoping that this will be a bull flag. Now, people are saying, well, why on earth are you buying stocks? Well, one of the reasons is that stock markets are generally bullish. They're optimistic, and we've had a good 10% pullback at the sort of latter part of the second half of this year. We've got the year-end Christmas rally, potential Christmas rally coming up. We've got two wars going on, which is always bullish for the stock market. We've still got some cash lying around. Economic numbers are still pretty good. Despite everything that's going on, we're still seeing strong retail sales. We're still seeing strong jobs numbers. That's all a veneer and a facade around the sort of things that are slowly crumbling away beneath the surface. We all know that. And at some stage, that's all going to come to fruition, and these markets will have to come down. However, that's not the perception, and I'm seeing an awful lot of fund managers and banks and commentators, for what they're worth, saying that they believe that this market is going to get up to new all-time highs towards the end of this year or into next year, and that this 10% pullback is literally that. If you look on this NASDAQ chart, still looks like a bull flag. There's the flagpole, there's the flag, and if we take a measurement from this, this could go a lot higher if you use the normal technical measurements. Depends on where you start this flagpole, but if you started it around here, for example, up to the top of the flagpole, down to the bottom, and then take that same distance, this sort of distance. Let's just do it while I'm on here. So I'm going to take it from here, but you know, you could take it from anywhere really, but from there to there, that's about 25%, all right, roughly speaking. If I take 25% from the bottom of that flag, let's just do that, let's something like this, and go up 25%. This is going to shock everyone, but it's a potential possibility. That takes us up to about 18,000 on NASDAQ. 18,000. The all-time high is around about 16,000 or so. Where was it? Let's have a quick look. Call it 16,000, just shy of 16,000. We could get up to 18,000 if this bull flag pattern works out. I don't know if that's going to happen, but if we do, we'll have a monumental crash probably thereafter, and that'll be an excellent opportunity to start shorting this market. For now, however, I really don't know. We've got all sorts of headwinds, as I said, but all sorts of things that are supportive of the market. One of the big headwinds is the dollar. We talked about the bond yields earlier, just touching shy of 5%, and we'll have a look at the dollar index, which is also really powerful and strong and moving higher every day. But if we go back to this chart, today already we're forming a little wick low. We've been forming multiple wick lows all along here, even though we've been moving steadily down and having higher highs, lower highs and lower lows. This is a flag within a bigger flag. As you can see, I've got this little flagpole and bear and bull flag, and I've got the big flagpole and bull flag. And if we go back to the 4-hour chart, have a look at what's happening right this minute as we speak, and as I'm recording it, we've got a little 4-hour wick low appearing on this chart at around about the 100 period moving average on the 4-hour chart. Let's go back to the day chart and have a look at where these moving averages are. On the 4-hour, we're below the 20, we're below the 200, below the 50, but bouncing around about the 100 period moving average. This is the 20 period moving average on the day chart. It's a really important moving average. If you don't do anything else but put a 20 period moving average on your charts, doesn't matter what you're looking at, the 20 period moving average, simple moving average, not exponential, not weighted, not whatever else type of moving average, VWAP, anchored, whatever. I don't use any of that. I just use a simple 20 period moving average on the day chart for most things that you're trading. It's a super key, super important level, and if you combine that with a few horizontal lines, and if you want to use indicators, you can. I don't generally use many other indicators. Sometimes I look at stochastics. That's the stochastic and MACD and RSI, but almost never. But there's the 20 period moving average on the day chart. We're bouncing off there. If we can hold that today, you can see that 20 MA is also curling up. If we can hold that today, we've got a good chance of a move higher, despite the dollar, despite bond yields, despite everything else, and maybe because of war going on all over the show. Now, I said I'd talk about Nvidia and Apple and Tesla. Tesla's earnings came out. Initially, we had a 5 or a 7% rally, but right now in pre-market, we're right down at $230 on Tesla. That's a big drop from where we are right now. It's worrying because there's the trend line and the channel line that would take us way below. It's already way below this channel line. I don't think we're going to get a bounce back up into there before the market opens. So that's the only glimmer of hope, really. If this is a pre-market move down and then we get a bounce back up again, very noisy people around here. If that's a pre-market dip and we open the market above that horizontal line at $242, then maybe we'll be okay on Tesla. Keep on saying Tesla. But I don't think it looks good, and it's a major and important channel. So this green bouncy line that I put on here up to the channel midline may not work out. Doesn't matter. I don't really mind because I'm not trading Tesla and I'm not trading Apple at the moment. I have been trading both of these quite frequently recently over the last number of months, and AMD. AMD we won't look at because we'll look at Nvidia, but Apple, okay, well, you know, generally, once we broke down through this very neat, perfectly beautiful rising trend line, we moved into massive volatility, and there we are right now. Look how neat and steady and beautiful and progressive that trend line was. Way too neat, way too long, way too steady. And the moment we broke down, all hell broke loose, and this became this volatile mess, really, with all sorts of things. First of all, a gap, then a gap fill, then back down, another gap, now another gap fill just to fill that gap. We're below the 100-period moving average, and we're now trying to get below the 20-period moving average. I don't know. You know, Apple's an old, clunky type of phone. I'm an Apple fan. I'm recording this on an Apple. My internet's connected to an Apple iPhone. Everything I do is Apple. I like it very much. But it is kind of clunky. It's kind of old. It's really expensive. The recent upgrades haven't been great. There are problems with sales in China. Sales have dropped off. So, I don't know. It's not overvalued, I don't think, at this stage. But I think there's room for a pullback. If the markets in general pull back, I think names like Tesla and Nvidia and AMD and a few of the others, I think perhaps maybe Intel, I think perhaps stocks like Google and Microsoft have a better chance at holding up. So here's Nvidia, and this is also not looking great. It's good for me because I'm short on Nvidia. My target for Nvidia is 302, call it $305, the bottom of this big earnings gap. Now that earnings number came out in May. That's how long this has been moving higher. I managed to short at around 500. We've actually moved up to about 500, just shy of 520 in after hours, and then dropped back down again. We've got a sort of a diamond formation here. If you look at this on the weekly chart, we've broken down through this channel, by the way, and down below to, before we look at the lozenge or diamond, there's the 50-period moving average, there's the 20, there's the 100. We've broken down beneath all three of them, and in aftermarket we're just slightly lower again. So that's not great. We do have a gap above us over here, a little tiny gap, almost no gap, just a few, well, $1 or $2, I suppose. So a very tiny gap just above that trend line. Whether this will carry on moving down or not, I don't know, but I think at some stage we're going to have to close this big earnings gap, get down to about $300. That might sound ridiculous for the Nvidia bulls, and when we were at $520, people were saying it was going to go to $600, $650, $700. There were even calls for close to $1,000 on Nvidia. Well, we're not going to get there anytime soon, I don't think, and I think we've got some space to go. We've got a very, very, very key support level at $400 round. 400 round, that's it, right there where my cursor is, where it's that low, that high, that low, and then if we get down through there, we're going to go to the top of the gap, which is at $366. We'll probably bounce off the top of that gap. Remember, gap tops and bottoms are support and resistance levels, but once we get into the gap, there's the previous all-time high, this green line. I've been putting this chart up for months now, but we're going to bounce off that line probably. That's the previous all-time high. Let's go back and have a look at it. It's quite a long time ago. And if we get down through that previous all-time high and the 200-period moving average, that's where it is at the moment, then we're going to go to the bottom of the gap, which is $306. There it is there. That's the previous all-time high. So it's just such a beautiful chart, too tempting. It's got to move down there, I feel. I don't think, we could consolidate sideways for some time. We might even make a fractionally new high. But I think at some stage, ultimately, maybe not this year, but maybe early next year or the middle of next year, we're going to have to get back down to $300. So that's my play on Nvidia. I would say sell rallies. I said I'd show you the sort of lozenge shape on Nvidia. Yeah, so there's the weekly chart. Pretty clear on the weekly chart too. Exactly what you saw on the daily chart. But if you imagine this is a little diamond shape, little sort of, I'm not going to draw that in there. I'm not sure if there's a shape that looks like a diamond on here. Maybe there is. No, I don't think so. But you can just draw a line up there, up to the top, a line down here, down to the bottom, a line from there downwards, and a line from there upwards. It's a diamond shape. How do you draw that? Something like that. You know, that's weird. But diamond shape, it's a reversal pattern. Normally forms a major top or a bottom with a diamond shape. That's what we're seeing now. Whether that's going to play out or not, these patterns don't always play out, I don't know. But that's Nvidia. So short down to $300 at some stage. We're now at 420, 25% drop. I don't know, doesn't look great. That's the 4-hour chart moving down as we speak into pre-market. So that's Nvidia, and nothing else I want to say about stocks generally. So we sort of short on Nvidia and long on Nasdaq. Sounds a bit weird, but that's the way we're positioned at the moment. We'll see how we go. And then I'm going to quickly look at these charts, these are the yen pairs, been the bane of my existence for a long time now. There's the dollar yen. I'm not going to talk about all of the other ones, euro yen, pound yen, Aussie yen, Swiss yen, CAD yen. These will all move along with the dollar yen. We're short on euro yen, we're short on CAD yen, Swiss yen, sorry. I'll show you why. Swiss yen, and we're short on a couple of the others. Some of them are hedged, some of them are less hedged, some of them more hedged, but in general just being absolutely annoying. But this is the Swiss yen chart. I'm going to put the weekly chart up here for you to have a look at. It's a very, very powerful, beautiful channel. It's a very long-term channel, and we've reached the top of it for the second time now. We've just gone slightly higher than the previous high a few weeks ago. It's a fantastic, beautiful, very neat, very clear channel. We're right at the top of it now. We've moved up in this last year or two from 109 to 166. Unbelievable. And that's where we are at the moment. And we've just taken a small short position. If we do get a move on dollar yen, and that drags all the other yen pairs down with it, we'll be fine. If not, we'll have to take a small loss. That's the nature of trading. We do have a daily small wick high from yesterday. If I zoom into yesterday's high, you can see a little wick there. There's the top of that channel. We'll see if we can get through there. But anyway, all of these are really contingent on one thing, and that's the dollar yen, and whether we can get a natural or market driven move lower from this very, very extended high at 150, or if we're going to get some intervention by the Bank of Japan and the Ministry of Finance to drive this down. I think both of those are quite possible and even likely, and we'll have to see how that goes. But looking at the dollar yen, it's very difficult to trade this unless you're in a position already. When these sorts of spikes happen, you can see that one over here. I was pointing it out on the screen, but of course you can't see my hand. This was intervention by the Bank of Japan, or at least rumors of intervention. But when we do see it, like over there and over here and over here, let's assume that was some intervention, although I think it was related to rumors regarding confirmation that they're allowing for inflation rates to go a little higher. A big move down and then spike back up again. When these moves take place, they're almost immediate, instantaneous. It's impossible to get into them. And by the time you've triggered your trade, or by the time your automatic trade gets triggered, there's too much slippage and you get in near the bottom, and what happens is you begin to move higher again. So you have to be pre-positioned if you're willing to take that risk. Now, I think that it's worth a go. You're going to have to put a stop loss of about 100 pips or 200 pips to allow for this move to move up to 150.5, 151, 151.5, 152. At some stage, they will intervene, and if you're in the market, you will get the entirety of that move. If you're not in the market, you'll probably miss it altogether. Whether you want to take that risk and trade this very annoying, very irritating currency or not, I don't know. That's your choice, but I'm inclined to do that. I'm not going to advise anyone else to do it, because although I don't think it's all that risky, any spikes upwards won't be dramatic. There's an enormous amount of resistance to moving higher because of fear, and there's an enormous amount of relief when it moves lower, and actually the path of least resistance is down, despite this being propped up by the carry trade. Their interest rates still at minus 0.5% compared to over 5% for the US, and much, much higher across the board, really, the pound and the euro and everywhere else. So that's the way that is. All right, so I've just been joined by another guest, so I'm going to finish this off.
Carry on.
No problem. And have a fantastic trading day. And if you have enjoyed this, please once again subscribe to the channel and give it a thumbs up. And I'm going to try and put this all together and keep it within about 20 or 30 minutes. So wish me good luck with that. Have a fantastic trading day, and I'll speak to you soon. But before I go, quickly, the Forex majors will follow suit. You can see the pound has moved down, it's just stopped us out, and we've got the Aussie, the Swiss, and the euro, all just sort of moving lower as the dollar moves up. And here's the dollar index, as I said, following suit, along with the 10-year, 20-year, and 10-year, and 2-year, and 30-year, all the yields moving to ridiculous levels. Can we hold beneath this rising trend line on the dollar? I don't know. Dollar index, we've got a high there, local high at 106.76. We've got a much more distance high at 107.31. Are we going to get back up there and higher? We've got channel lines and trend lines all over the show here providing resistance. But if that yield continues to climb, the dollar will continue to climb, and dollar's a safe haven in times of trouble and war and calamity. People rush into the dollar, however crazy that might sound. Take care.